traffic tracker.
All right, thank you very much, Britton. Well, maybe you're interested in investing for retirement, but you don't feel like you have a lot of discretionary income to do it. You may be surprised to find you have several options to build that nest egg. Here to talk more about that on Monday, Tuesday is Stewart Welch of the Welch Group. Good morning, Stewart.
Good morning, Mike.
Let's talk about that, because I know you did have one person asking advice saying they've built up an emergency fund, which we know we all should do, but they didn't have a lot of extra money to invest. What advice would you give this person?
Well, I think their big problem was every time they go to invest, these mutual fund companies impose really big minimums.
Okay.
And so they can't really get diversified. And it's a big problem for small investors, folks that are just getting started. And so there's a perfect solution. Okay. You might want to write this down.
But I got my pen out.
First thing you do is go to Schwab.com. So this is Charles Schwab and Company. They're the largest discount broker in the world. And then go to their fundamental index funds. Fundamental index funds. And they have a very unique program. So what they do is it's a $100 minimum.
$100 minimum investment. That's
$100 minimum investment. There are 5 different mutual funds covering everything from domestic to international mutual funds. It's a $100 minimum per fund. But once you've invested the $100, raise $100 per fund, after that, you can have automatic investments as little as $1.
Wow, okay.
So and it is an index-oriented program, which means the mutual fund, the internal costs in the mutual funds are very low. So here's the thing, there are no transaction fees. And so when people get ready to do rebalancing and those kind of things, there's no transaction fees associated with this at all.
All right. And when you look at the expense ratios on some of those, what are the numbers you need to look for when you look at for these funds?
The typical mutual fund, the average mutual fund, has an internal management fee of 1.4%.
Okay.
And these are index-oriented funds, so they're going to be about a third of that, maybe 30 basis points, 1/3 of 1%.
Okay.
And Schwab also, and this is the fundamental index program uses a unique methodology to actually pick their stocks compared to traditional indexing. But Schwab has a traditional indexing program using their own index funds, which is very similar to this and very, very low cost.
And certainly you should invest according to your risk version. So what you're willing to risk, that's what you do. But usually those are low risk funds.
Well, and particularly people that are starting out with a small sum of money, they can afford to take more risk.
Well, that's true. All right, you're looking at another situation where people, sometimes they have an IRA and they have taxable and non-taxable contributions. They want to know how to get that into something that's going to be non-taxable. How do they do that?
Well, this particular viewer wanted to convert to a Roth. He was about to turn 70, and at 70 and a half, he has to start taking money out.
Okay.
And so he says, I want to convert it to a Roth, but I've got both non-deductible and deductible contributions in there, and what you have to do is just separate those. So you have to go back to your tax records and figure out what the non-deductible contributions are, separate those, and then you can roll the whole thing over into a Roth IRA, and it's a great move for him.
All right, always great information from Stewart Welch on Money Tuesday. All right, coming up, new music and music hitting the